Imagine walking into a bustling, beloved local restaurant.
Okay, I am picturing it.
Right. So they are turning over tables, doing a really solid business, and pulling in, let's say, about $1 million in a quarter.
Sounds like a great little spot.
It is.
Oh.
But now imagine walking outside, looking at that same brick-and-mortar building, and being told it is currently valued by Wall Street at nearly $8 billion.
Yeah, that math does not add up.
It breaks your brain a little bit, right?
Yeah.
Your standard mental models for how a business should be valued, they just completely shatter.
They do.
Welcome to today's deep dive. We are looking at Oklo, which is this advanced nuclear fission company, and we're really trying to make sense of a valuation that looks entirely divorced from its current revenue.
Utterly divorced.
Exactly. So for context, today is August 12, 2026. Oklo stock is trading at $47.01. It's up 5.66% today alone.
Which is a nice bump.
It is, but it has been a wildly volatile ride for anyone holding it. I mean, they are sitting 75% below their October 2025 high, which was $193.84.
Yeah, a massive haircut. But they are bouncing back from a recent July low.
Right. So the mission for our deep dive today is to really unpack this paradox. Okay, let's unpack this. How does a company doing the revenue of a successful local diner justify a $7.74 billion market cap?
It is the multi-billion-dollar question. And to understand what is happening with Oklo, you have to temporarily suspend, traditional financial analysis, like...
Throw the standard PE ratio out the window.
Exactly. Evaluating them like a mature, revenue-generating utility company will just lead to total confusion.
Right.
The real story here requires looking at them as a pre-commercial technology company, one that literally just proved a massive technical concept in the real world.
And that's what is driving today's price action.
Yes. When you combine their recent hardware milestone with the macro reality of an AI industry that is just desperately searching for immense amounts of clean power, well, the valuation starts to make a lot more sense.
Okay, so before we dig into the daunting financials and the balance sheet, we need to understand the catalyst for today's 6% stock surge. We had to look at the hardware.
Let's do it.
So on August 5th, Oklo's Grove's isotope test reactor down in Lockhart, Texas, achieved something called first criticality.
Right.
And doing this on what the industry calls a greenfield site is apparently a massive deal.
Oh, it is the defining moment for any nuclear startup.
What does first criticality actually mean in plain English?
It simply means the reactor is sustaining a controlled nuclear chain reaction entirely on its own.
Like it doesn't need an external power source to keep the reaction going.
Exactly. The neutrons are splitting the uranium atoms, which releases more neutrons, which split more atoms.
So it's a stable loop.
Right, creating a continuous loop of heat generation without needing an external trigger. The machine is essentially alive.
Wow.
What's fascinating here is that what really shocks the energy sector wasn't just that the reactor worked.
What was it?
It was the speed. I mean, the sheer speed at which they built it. They went from a greenfield site, which is literally just an empty patch of dirt on private land.
Like a literal greenfield.
Literally. No existing nuclear infrastructure whatsoever. And they went from dirt to a functioning reactor in just 229 days.
Okay, wait, let me stop you there because I really want to put that timeline into perspective for you listening. When people think about nuclear power, they usually think of projects like Plant Vottle in Georgia.
Oh yeah, the legacy plants.
Right. That was a legacy project that took well over a decade, ran billions of dollars over budget, and required, pouring literal mountains of concrete before a single atom was ever split.
Mountains of concrete and mountains of caps.
Exactly. So doing this in 229 days, so this is like a tech startup, successfully turning on its prototype for the first time, proving the code actually works in the real world.
Instead of just functioning perfectly on a whiteboard. That is the crucial distinction here. Because the advanced nuclear industry is just littered with companies passing around highly polished PowerPoint presentations.
Lots of theory, not a lot of actual power.
Exactly. And the regulatory context here is vital, too. This is the very first reactor in the Department of Energy's reactor pilot program to reach first criticality under these specific conditions.
On private land, right?
Yes, on private land. Oklo actually bent the metal, assembled the components, navigated the initial safety parameters, and achieved sustained fission in under a year.
That is wild.
It is. And by executing on that rapid construction timeline, they significantly de-risked their path to commercialization. They proved They aren't just a concept company.
Right, they can actually execute. So the prototype works, which is obviously an incredible engineering feat.
Absolutely.
But eventually, right, every tech startup has to walk out of the laboratory and face the accountants.
The dreaded earnings report?
Exactly. And when you look at the Q2 2026 earnings report, that cognitive dissonance about the restaurant valuation, it just comes roaring back.
Yeah, the numbers are stark.
Very. They generated their first material top-line revenue, which actually beat estimates, but it was just $1.2 million.
Yeah,
Meanwhile, their net loss widens significantly to $48.5 million for the quarter. That's an EPS loss of 28 cents compared to the modeled 16 cents.
yeah, the costs are scaling exponentially right now.
Why so fast?
Because they are transitioning from that theoretical phase to physical deployment. And, hardware is unforgiving.
Oh, for sure.
Software companies can scale by adding server space and hiring a few more developers. A nuclear company scaling up means purchasing highly specialized raw materials,
Right.
signing massive manufacturing contracts, navigating endless federal red tape, and hiring armies of specialized nuclear engineers.
So the research and development costs are just naturally ballooning.
Exactly. It's accelerating exactly as you would expect for a company trying to build commercial powerhouses.
But the projections for how they eventually make money from this, I mean, they are daunting.
The revenue ramp is definitely a long game.
Right. Consensus estimates show them hitting about $1 million in revenue for all of 2026. Then maybe $6 million next year in 2027.
Chump change for an $8 billion company.
Exactly. Then $55 million in 2028. They don't even cross the $200 million mark until 2030.
Yeah.
And meanwhile, they guided their cash flow usage for 2026 at $120 to $150 million.
The burn rate is real.
So if they have all this money in the bank, but they're burning up $250 million a year to build these things, aren't they going to run out of money before they ever hit that $217 million revenue projection in 2030?
Well, if this were a typical startup, yes, they would be sweating right now, preparing for a massive, highly dilutive stock offering just to keep the lights on.
Right, which usually tanks the stock.
Exactly. But Oklo possesses a massive structural advantage. They're saving grace, really.
The war chest?
The war chest. They're sitting on roughly $3 billion in cash and marketable securities.
$3 billion?
With a B. A good chunk of that came from a $1.2 billion financing raise back in Q1. And crucially, they carry no meaningful debt. So when you divide a $150 million annual burn rate into a $3 billion cash pile, that runway stretches out for decades.
But wait, I have to jump in on how we frame that cash pile, because I was looking closely at this.
Okay, and what'd you see?
Just the interest and the dividends they're collecting by letting that $3 billion sit in marketable securities. It's huge.
Oh, yeah. The interest income is fascinating.
Right. Their bank account is generating more revenue through simple interest than their actual nuclear physics business is generating right now.
It is a bizarre but very real dynamic in the pre-commercial energy sector. Right now, Oklo is essentially a massive pile of treasury yields funding a nuclear science experiment.
That is such a wild way to put it.
But that is exactly why the market gives them leeway. In this sector, cash is oxygen.
Right.
Having $3 billion is a massive competitive moat in itself. It means they can absorb those widening $48.5 million quarterly losses while they navigate the next 2 to 4 years of development.
So they don't have to worry about the capital markets drying up.
Precisely. They're insulated from the desperate need to raise funds when interest rates are volatile or when investor sentiment sours. They control their own destiny.
Okay, so if the runway is that long, and the Groves test reactor just proved the technology works in the real world, it seems like everything is perfectly aligned.
You would think so.
But the smart money, the analysts, and the insiders, they were acting incredibly cautious.
Yeah, the bearish indicators are definitely flashing.
Following these recent results, Truist slashed its target to $51 with a hold rating. Citi cut to 57.5, giving it a neutral.
Right.
Canaccord cut their target to 100, though they did maintain a buy. And H.C. Wainwright is basically the lone standout, maintaining a $90 buy target.
Analysts are modeling based on friction, and the market is pricing in severe upcoming friction.
Right, standard financial modeling, adjusting for extended timelines. But here's where it gets really interesting.
The insiders.
The insiders. Over the last 90 days, the executives, the people inside the building, have net sold over 1.13 million shares.
Yeah, that is a massive red flag.
Right. If the executives truly believe this is the future of energy, why are insiders dumping over 1 million shares? It's hard to reconcile that with the optimism of the Groves Reactor milestone.
It requires some critical thinking for sure. While insider selling can occasionally just be, routine portfolio balancing or tax management.
Sure, executives buy boats.
Exactly. But a cluster of selling this large suggests that those with the most direct, granular knowledge are actively hedging against the long timeline.
Hedging against execution risks.
Yes. And the biggest hurdle they are facing isn't capital or even engineering anymore. It's the United States government.
The red tape.
The red tape. Let's talk about their first planned commercial powerhouse, the Aurora project in Idaho.
Right. They are targeting a launch for late 2027, early 2028, right?
That's the target.
Right.
But to get there, they still need full combined licensing approval from the Nuclear Regulatory Commission, the NRC.
And the NRC is not known for being quick.
Not at all. They are accustomed to regulating massive, gigawatt-scale light water reactors, the kind that take a decade to build.
Right, the legacy plants.
Oklo is trying to license a tiny, fast microreactor that uses entirely different coolants and different fuel types.
So the regulators are basically having to learn a whole new technology.
Exactly. The regulatory framework is having to catch up to the science. The NRC is meticulous, they are understaffed, and they are risk-averse by design.
Which makes sense, it's nuclear energy.
Of course. But the probability of the Aurora project receiving full, frictionless approval on Oklo's highly aggressive timeline, it's incredibly low.
And the insiders know this.
The insiders know that regulatory timelines in nuclear energy have a historical habit of slipping by years, not months.
Wow. And even if they get the NRC rubber stamp tomorrow, there is an even larger physical bottleneck staring them down, which is the fuel.
Ah, yes, the fuel supply risk.
Because the advanced reactors Oklo is building,
Right.
they don't run on the standard uranium used in those legacy plants, right?
Yeah.
They require something called HAEU.
HAEU, high assay, low enriched uranium.
Right.
To understand why this is a bottleneck, you have to understand the physics of the fuel.
Okay, break it down for us.
The uranium used in traditional commercial power plants is enriched to less than 5%.
Okay.
Weapons-grade uranium is enriched to 90% or higher.
Got it.
HALEU sits in a sort of Goldilocks zone. It's enriched to between 5% and 20%.
Okay, but why do they need that specific enrichment level for these microreactors?
Because it allows the reactor core to be incredibly small, yet run for years, sometimes even decades, without needing to be refueled.
Oh, wow. So you don't have to keep swapping out fuel rods.
Exactly. It is the secret sauce that makes microreactors economically viable.
But there is a catch.
A huge catch, the supply chain. Historically, the primary global supplier for commercial HALEU was Russia.
Oh, well, that's a problem now.
A massive problem. Geopolitical events have completely severed that supply chain for Western companies. And the domestic capacity to produce HALEU here in the United States is basically just getting started. It's nascent.
So let me get this straight. They have a functioning reactor design.
Yes.
They have $3 billion.
Yes.
But they desperately need a reliable supply of this HALEU fuel. And without it, the reactor is just a really expensive empty building.
Precisely. A lender isn't going to finance a commercial power plant if you can't guarantee you have the fuel to turn it on.
Right. So the timeline is just super fragile.
Until both the NRC license and a secure HALEU supply chain are locked in, yes. And that is exactly what the insiders are hedging against.
Okay, so we have this intense duality. A proven prototype and a massive $3 billion war chest. But it's weighed down by severe stock drawdowns, slashed analyst targets, heavy insider selling, regulatory mazes, and a missing fuel supply.
It is a lot of friction.
Ton of friction. But despite all of this, the stock is still actively traded and heavily supported by retail and institutional bulls. Why are they staying in the fight?
They are staying in the fight because the macro environment is practically begging for what Oklo is building.
The AI boom.
Exactly. We're entering an era of unprecedented energy demand, driven almost entirely by the proliferation of AI data centers, plus broader energy security concerns.
Right, exacerbated by high oil prices and geopolitical tensions. We hear about data centers constantly, but it is easy to underestimate just how much power these AI training clusters actually require.
The numbers are staggering. A single massive AI data center can require the same amount of electricity as a mid-sized city.
A whole city.
A whole city. And crucially, they require continuous baseload power.
So they can't just slap some solar panels on the roof.
No, they cannot rely solely on wind or solar because the sun goes down and the wind stops blowing. An AI supercomputer needs to run at 100% capacity 24/7.
If the power fluctuates for even a moment.
It can disrupt massive computational workloads costing millions. Nuclear energy is the only zero-carbon source that provides uninterruptible, massive baseload power.
Which brings us to how Oklo actually intends to monetize this sheer desperation for power.
Right.
When you look at their strategy, they rely heavily on non-binding letters of intent, or LOIs, signed with these data center operators.
Yes, LOIs.
So what does this all actually mean for the listener? Aren't these non-binding agreements just corporate maybes, like if you build it, we might buy it?
If we connect this to the bigger picture, an LOI is basically just a marketing tool.
Right.
It shows market interest, which is great for public relations, but it is not a bankable contract. The entire turnaround for Oklo hinges on their ability to convert those maybes into binding power purchase agreements, or PPAs.
How does a PPA mechanically change the game for them?
A PPA is essentially a marriage contract for energy. It is a legally binding agreement where a customer, like a massive tech company, agrees to buy the electricity generated by the reactor at a fixed price for a very long period.
Like 10 or 20 years.
Exactly. And once Oklo has a signed PPA, they have guaranteed future cash flows.
Yeah.
They can take that contract to a major bank and secure project financing at favorable rates to actually build out the Aurora powerhouse.
Got it. So a PPA transforms Oklo from a speculative research project into a contracted commercial utility.
Yeah.
And the government seems to be recognizing this urgency to get these things built too.
Oh, absolutely. The speculative catalysts are huge.
Right. The Department of Energy has a $50 billion nuclear value chain program. And Oklo is reportedly one of 5 initial contenders for that funding, though, to be fair, that is still unconfirmed.
Right, but just being in the mix is significant.
For sure. And there is a real path forward on the regulatory front, too. The NRC recently approved Oklo's Principal Design Criteria Topical Report for the Aurora project in Idaho.
Which is a very positive step.
And on the fuel side, the DOE surplus plutonium program is emerging as a potential pathway to solve that HALEU bottleneck we were discussing.
Yes, by downblending stockpiled materials.
Okay.
So the macro tailwinds are immense. Between the DOE funding, the tech giants needing power, and the push for domestic energy security, there is a massive safety net forming under the advanced nuclear sector.
Oklo just needs to survive long enough to fall into it.
Exactly.
So bringing it all together for you listening, Oklo presents this incredible dual reality.
It really does.
On one side, it is a company that achieved a genuine, high-speed technical marvel. Getting the Groves reactor to first criticality in 229 days on a greenfield site proves their engineering is world-class.
It's undeniable.
And they hold an enviable $3 billion war chest that ensures they can survive the next few years of cash burn.
It's a moat that separates them from almost every other competitor.
But on the other hand, they remain a highly speculative pre-commercial entity. They are fighting against massive valuation multiples, steep insider selling, and a maze of regulatory red tape and fuel shortages.
Which could easily push their commercial launch out by years.
Exactly. It's a fascinating standoff.
It is, and it leaves you with a final thought to mull over looking ahead. As AI data centers increasingly drain the national power grid over the next 2, 3, 4 years,
Which they will.
will the sheer desperation for electricity force regulators to fast-track commercial nuclear projects like Oklo's?
Just to keep the lights on.
Right. Or will the slow gears of federal bureaucracy outlast even a $3 billion war chest?
That is the ultimate question. It's going to be wild to watch this unfold. Thank you so much for joining us on this deep dive. Keep questioning the narrative behind the numbers, and we will catch you next time.